Hey everybody, Spartan Trading here from SpartanTrading.com. I just want to hit you guys with a little bit of options basics. Now, one of the most important things is when you're learning options is to understand what the Greeks are. Particularly, you want to know what the delta and the theta are of contracts. What's the delta? The delta is the amount the contract will move when there's a $1 increase in the underlying asset. So, let's say you were buying a ACB call January 17, 2020, so these are leaps. Let's say you were buying a $7 call. So for every $1 increase in the stock from right now, it's currently at $9 to make it easy, the contract will move up the contract will move up 77 cents. Now as the contract moves up away from that strike, these are in the money options, the delta will slowly increase until it gets to 1. At that point, for every $1 increase in the option, the contract will move $1. Now, the theta, on the other hand, is the amount that option contract will decay. So the value of the contract is worth, at this point, $2.83. So every single day closer to expiration, which is the January 17, 2020, the contract will decay in the value of 0.0032. It's important to understand the theta and the delta when you're picking your contracts because you need to understand what contract makes sense in terms of the price and that delta for what you're trying to do with the underlying asset, which in this case is ACB. These differ from obviously, each stock to each stock. There are some contracts that are cheaper than others because of the volatility of that underlying asset is less. If you have less volatility in the underlying asset, that means those contracts will not move as much, and thus they're going to be cheaper as a rule of thumb. So, just want to hit you guys with the start of some options basics. We'll come back to this concept and talk a little bit more in depth going forward. Thanks guys, and that's it for now. Have a great day.